Hello, this is a technical analysis and also a trade idea and also some education around how one can look at trading. In this case, it would be a swing trade. And it starts with the setup. That setup may be correct or not. We're assuming that it has a higher chance than a 50% to play out. Otherwise, it wouldn't be a trigger for our trade. In this case, I'm looking at this channel. We've got a touch point here, a touch point here, and then another touch points at the lower band of the channel. Okay, that's what's constructing my channel. And I'm assuming that other algorithms and traders are looking at this channel. Now, we have here at this junction, and we are looking at the 4-hour candles, okay? And we are now on the 30th of November, early in the day. So we have here, if we look at it closely, we have, we're crossing down, let's lock this. We're crossing down that channel. And this black line also is the EMA 20. That's the exponential moving average, in this case on the 4 hourly candle, as mentioned, and we are under it. So the idea is that this will play out to be a crossing down of the channel, which is also crossing. This is a potential bear flag. You can look that up. And then price will be going down further. Now, what I want to show is how you can set up your trade in ways that are basically looking at your reward versus risk in different ways. Your reward is the from the entry to the take profit on the short, and your risk is your from the entry to the stop loss. In this case, we have a 2 to 1 reward versus risk. It says here 2.02, but let's round it to 2. And it's the stop. My stop here is at 7.562. Okay, so it's well above all these highs. Okay, going all the way back to the 23rd of November. So about 8 days already. Now, one could also decide, okay, I'm going to go for a higher reward versus risk. 2 is nice and considered to be a minimum many times during trading, but I want to go for something that is more aspiring. So I'll actually take this high over here of the 29th of November, which is 7.421, and I'm gonna place my stop just above it. Okay, so I already have, I created from a 2 to 1 reward versus risk. I've got now 2.79. One could also say, now why not do that? Because I mean, it's possible. There's no right way of doing it, one absolute right way. In this case, your probability to win is lower. You can be stopped out because your stop is closer, but you're going for a higher reward versus risk. Now you could say, okay, I'm gonna go to the top of this candle. I mean, I'm gonna go just straight above the top of this candle, which is 7.309. Okay, just above that. Okay, the top of this candle, the high of this candle is 7.264, and I'm going to go above the 7.3. That's a bit of a round number because of the 3, so I'm going to go 309, and I've already made my reward versus risk into 4.59. Okay, um, and you can also mix it up. You can start with your original stop, and once price goes down a bit, hopefully, then you can also lower your stop. This is like a trailing stop, and even have your stop at the entry, but you want to see that you don't do that early enough, too early. So you get stopped out. So in summary, 2 to 1 is usually, or some go to 1.5 to 1 is the very minimum reward versus risk you want to go to, and you need to look at it in ways of how it relates to your probability to win. Regarding nat gas, it does look like a short. One could say, okay, if I'm going, I can go to this stop because if it gets there, if it gets to the 7.313 in this case, then it means that price is going back into this channel and my setup is being invalidated. So in this case, because we are capturing the setup at the junction, or as it looks like, I mean, even if it does retest that lower band of the channel, it shouldn't get to that 7.313 price level. And if it does, there's a problem with our setup. Okay, either it's a deep piercing and faking out again, or there's a problem with the setup. It's not a bear flag that is going to take the price down. So in this case, I can aspire for a higher reward versus risk. And if I look at the currently I'm on 4.5, so my entry is at 7.110 current price exactly, and my profit is at 6.197. Okay, all the way down here, and my stop is at 7.313. So this is a legitimate trade idea, aspiring for a higher reward versus risk because we're catching the price during an interesting junction of a technical setup. And then you can aspire for a higher reward versus risk. Okay, so this is what you want to remember. If I've caught that entry over here, then I'm more sensitive, more fragile because it can also retest back. I've also got this low over here. So short sellers can be covering part of their profitable shorts, taking the price back up even temporarily, which makes my gut feel not so great during the trade. And so here I'm catching it early enough. So it justifies going for a higher reward versus risk. Trade nat gas at your own consideration. And thank you. Do come back to Forex Live for interesting technical analysis perspectives. Thank you.